Have you ever been confused about how to read a credit report? Maybe you were looking at your own credit report, or maybe you're a landlord or a property owner who is selling your property with owner financing, and you're trying to understand and qualify that potential borrower's credit history and verify if they have a good or bad or medium credit score. Well, I know from experience that when I first got into the banking world, it took me quite a while to grasp what a credit report was even telling me and how to make sense of all the numbers and figures all throughout it. I think all credit reports kind of follow a similar logic, but depending on where you get it from, sometimes they're laid out pretty easy to understand. Other times they're like very, very confusing. It is not that credit reports are really all that difficult to understand. It's just a matter of understanding the basic fundamentals of how to scan through the thing and understand, like, what is this trying to tell me? For me, it took a long time to grasp what was going on. So in this video, I want to walk you through an example credit report and just show you this is what it's saying, this is what it means, and this is how you can dig deeper and understand, is this a problem or not? Does this require that I ask more questions of this person to find out what was going on with this payment, or why it was late, or why it was missed? And that's for where you can get these credit reports from the people you're trying to screen, whether it's a borrower or a tenant. There's actually several different places you can go to get this, and in pretty much all of them, they're set up in such a way that the person you're pulling the credit report on, they're the ones that pay the bill, not you. So I'm going to include a few links beneath this video to different places you could go to do this. A lot of property management software has this built into it, like Tenant Cloud or Avail or Apartments.com. So if you're using something like that, it's pretty easy to create a new profile for that potential tenant and send them a request to get a credit check and a background check. Or you can also use Smart Move from TransUnion, and they work pretty much the exact same way. It's just that it's not connected to a property management software per se. You can just go directly to that one service and send it to them through that. Pretty much all the ones that I know of are sort of set up with the assumption that the person getting their credit pulled is a potential tenant, not necessarily a borrower. I'm not really sure why, but if you are somebody who's trying to do a credit check on a potential borrower for a property that you're selling with owner financing, or even if you're just trying to extend a loan to somebody for some reason and you want to check their credit, you'd basically just have to deal with all the different lingo referring to landlords and tenants and the different email notifications that go back and forth. But once you actually have that credit report, they should all follow a pretty similar structure to what I'm about to show you. So I'm going to jump into this example and we'll walk through it, and hopefully you'll be able to make sense of it. And as we can see from this example, this score is 744. That's pretty decent. I can't really tell you what metrics you need to use as far as when you should say yes or no to an applicant, but I can tell you from my experience in the banking world where we would lend, millions of dollars to people for commercial loans. The way we used to look at it was, for the most part, if a credit score was ever 700 and above, that was pretty much a shoo-in. There might be some tiny little issues in the credit report worth investigating, but for the most part, if somebody's score is, 700 or north of that, they're probably a pretty safe bet. I think on maybe 3 or 4 occasions I saw credit scores that were over 800, which is pretty darn uncommon from what I've seen. Once the scores dip down to like 650 to 700, then there may be a few questions you might want to ask. And once it goes to the range of like 600 to 650, then there's usually at least a reason or two why it's that low. And the person hasn't necessarily done everything perfectly. And once it dips below 600, that was a pretty major issue in terms of how we looked at it as commercial lenders. And it would be pretty hard to approve somebody who was that low. And again, I'm not saying that you need to look at it that way, but just to give you a frame of reference, that was how we looked at it. So really, when you see that score, that's helpful to know, but that's not everything. In order to really understand what's going on, you have to scroll down and dig into the details of what this person's financial picture looks like from a debt standpoint. So if we go ahead and scroll down, when it comes down here to total monthly payments, it gives you a nice little color grid illustrating what types of debts they're currently paying on. So it looks like this person has more than half of their debt is related to real estate loans, that kind of thing. And then they've got some kind of a lease, line of credit, auto loan, secured loan, revolving charge account, and credit card. So they've got a pretty diverse array of different debts that they're currently paying on. And their total monthly payments are $5,035. So basically what this is telling us is that this particular applicant better have a pretty healthy income if they're going to be able to afford to make all of these monthly debt service payments and pay for their own personal living expenses and make the payments that they're going to have to make to us each month. So it's just something to keep in mind. When we scroll down further, this also tells us what their total current balance is on all their debts. So they're owing about this much. If they were to pay everything off today, that's how much they'd have to come up with. It also breaks down what portion of those debts are baked into lines of credit and auto loans and credit cards and that kind of thing. When we scroll down further, this is telling us about any accounts that have ever been late and how long it's been since they've been late and any outstanding collections they have or any public records. And this is looking pretty good for this person. They don't have any of that stuff. I know something that I did used to see quite a lot in the banking world. For whatever reason, people would get like these medical collections where they would owe like $50 for something. And it was basically a bill that the doctor's office never really gave to them, but it was still owing. So this person didn't even realize they had this collection out for them. And as a result, it really kind of hurt their credit score. And all they had to do was just pay it off to get it resolved. So it is possible that you may come across collections from time to time that are pretty insignificant. But if you're seeing collections that are like thousands of dollars, then that's a pretty big red flag. And you'll probably know this already just based on their credit score, because this number up here is probably going to be a lot lower if they have a lot of collections or accounts late or public records or anything like that. And when we keep scrolling down, this tells us the account history. And I think what this is typically doing is going back about 7 years to tell you all of the accounts that are currently open and ones that have been paid off and closed as well. So for this one, for example, Department of Education, that's most likely a student loan that this person has, and it's got a current balance of $2,075. Original amount was $4,500, and their payment is $45. And all of these green circles with a C in it are telling you that they have been current on all of those payments. So they really have no history of being late on this particular loan. And if you were to expand each of these, you would probably see the same thing for all the other accounts that they are currently paying on or that they have paid off and closed. When we go ahead and scroll down here, this is also telling us some of the other inquiries that have been made into this person's credit. And basically what this means is that at some point, this applicant most likely applied for a loan or a credit card or something with these other lending institutions. And at that point, they pull a credit report on them too. This is also going to list some of their previous addresses. That may or may not be helpful to you, but it's almost always going to be included there. And then for employment, if the person is currently employed, you should see that information here. And this can also be helpful when it comes to verifying a person's income. Because keep in mind, this credit report is not telling you how much money a person makes. It's just telling you what their current and previous debts have been and how effectively they've been paying those on a historical basis. So this really isn't even half the picture of their total debt to income and what that looks like. If you want to understand what their income is, one thing you could do is get their past couple of pay stubs that they've received from their employer, and that can just be used to verify what their approximate monthly income is. You could also get their most recent W-2, and that's going to verify what their annual income was in the most recent tax year. However, that doesn't necessarily guarantee that they are currently employed. It just shows what their historical income has been. So it's usually a pretty good indication, but it's not a guarantee that they're currently employed. You could also get their most recent tax return, which would detail all of their taxable income and exactly what that looked like for the most recent year. So those are just a few of the things you can do to verify what the person's income looks like. And the reason that's important is because, to somebody who's only making $5,000 a month, this is a ridiculously high amount of debt to be paying on. But for somebody who's making $20,000 a month, this is not bad at all. So that's why it's important to understand how much money they're making and then kind of factor that into this whole equation of how much debt they've got. And then when we scroll down here to the bottom, it's also going to let you know of any particular factors that may be hurting their credit score. So these reasons here, the date that the oldest account was open is too recent, lack of sufficient relevant real estate account information, the total of all balances on accounts is too high, or balances on bank card or revolving accounts too high compared to credit limits. So a lot of times these things can be a little petty and don't necessarily mean anything bad, but it's important to see this because that could be part of the reason why this person's credit report isn't 800. And I will say, if you ever do come across payments that are late or historical payments that have been late or collection accounts or anything like that, it doesn't necessarily mean you need to automatically turn them down. It could, but it could also just mean you need to have a conversation with that applicant to understand, okay, why were these payments late? Why are you currently late on this? Are you going to get this resolved? Is this something we can expect to see from you if we take you on as a tenant or a borrower? The credit report is going to equip you with a lot of information to just help flesh out the story and understand what is going on and what kind of a person you're dealing with in terms of financial responsibility. So there you go. That's the overview of how to read through a personal credit report. That particular one is pretty clean. There's not a whole lot of issues going on there, and that's generally what you want to see, obviously. If you do see a lower score, like 600 or, below that, that's usually going to indicate that there's a lot of issues you need to dissect and just get more information about. It doesn't necessarily mean you need to say no just because the overall score is lower. It's basically just saying, hey, there's some stuff that needs to be investigated, and you're going to need some pretty good answers to those questions. Like if their payments are consistently late on a particular loan or rent payment or something like that, why? Or if a payment was just completely missed altogether and defaulted and stopped paying it, why? And especially if that particular missed or late or just defaulted payment is very similar to the type of payment they will be making to you, that's a huge red flag that you're definitely going to want to get some answers to. And if you don't get a satisfactory answer, then that may be a good reason for you to say, no thanks, this is not going to work. But again, that's up to you and your own underwriting standards and how much risk you want to take on that particular tenant or borrower. Also remember, a credit report is not the only thing that matters. There's a whole lot of other stuff that comes into play as well, like that person's amount of cash they have on hand, their employment history, and how consistent that is. But anyway, in terms of just the credit report, hopefully that gives you an idea of how to make sense of it. Again, if you need help pulling a credit report, I'm going to have some affiliate links beneath this video. You can check those out. Thanks for watching. Hope that was helpful. Talk to you next time.